Yo, so we just got confirmation here for the NAS 100. The trade's actually done, but I locked in around 200% on the margin, and then it proceeded to do another 100 points. So retrospectively, it would have been more sensible of me to have locked in maybe like half, and then let the rest of it ride on a trailing stop. And if I had done it in that fashion, I would still be holding the trade at 899 there. So that's pretty solid numbers. And yeah, like I said this a couple hours ago, I said it pretty clairvoyantly that a break of H1 support would inflict a continuation on larger time frames. So that's what we're looking at right now, and it's synonymous over on the Aussie dollar. You know, we had a break very early in the market there, back at around here. We had that confirmation given at 1500 in the pre-market for New York session. I think just plummeted out of the sky, right? You could have waited for the 1630 open, still would have been same, better R&R actually. But yeah, that would have generated at least 200% on the account. All right, and it doesn't stop there. I was actually doing some cross-referencing over on the Thinkorswim platform, and the numbers are not any less generous. It's just across the board. Everywhere you go, the market is just printing cash, right? I suppose it is. I suppose there's a correlation with that of the inflation that we're seeing in the fiat currency, but yeah, if we take a look at like the SPY, for example, a lot of people like trading this for the option calls. You can see here once again on the H1, it was a very clean call. You had your structure defined. Like here, let's say you had the break, you took entry here at 1000, thing popped up like nobody's business, and then if you went down to the 5, you would have been able to see that the bear opportunity was pretty accessible from pre-market. So you had lines defined here, and then you probably got in roughly around here. You had liquidation set here, allowing for full optimization. You did a trailing stop, and there's nothing preventing any of the success that we've been seeing, right? So that was really amazing. And if we go over to Tesla, I haven't done a review, excuse me, on Tesla yet, but let's take a look and learn here together. We could see that we have some definition like this, right? Pre-market, and we had a crossover with entry here at 1130, and so even though it's currently in profit, it's not remotely synonymous to what we've just seen on these other two securities. But at the end of the day, it's still profitable, and it may go lower. We just got to wait and see. Right now, it's running on that SMA, so this could be a reversion point. I couldn't say with confidence. I prefer not to trade equities individualistically just because it is susceptible to more manipulation, right, and fundamentals. But going back over to yesterday, you could see that there was a very nice bull run for the price, right? Let me see if I could find. I'm a bit dazed and confused. All right, so we have some structure here. We had the cross. Took entry here 9:45, literally 15 minutes after that bell opened there, and you would have rocked prices down. I don't know if you guys are familiar with Trader Society, but he did a review recently that was under the same security. So I mean, it's nice to see that I'm on parallel with a lot of the other guys that are prominent in the community. All right, so that's what would have happened there. And then yesterday was a really solid opportunity to take price back to previous highs. So you would have had the horizontal at $1,026, and then with the confirmation given at, let's say, 1835, you could have proceeded to rock prices higher. Yeah, I suppose that would have been more like going into Tokyo actually, but if anything, you could have taken an earlier entry with this pump that we had back at 4 o'clock here. You Could add some definition like that. You got this massive fucking candle. And then if you want to get egregious, you could have waited for the pullback there. And you can see with these wicks, it's respecting price very clairvoyantly. So that would have been super solid to get in on that. That would have been generating you, with the leverage, generating you 200%, 300%, like a lot of money. A lot. It's just a matter of knowing where to define those critical levels, man. It's really getting in at the best price and just managing risk well is what makes you last longer in the business, right? That's what it's all about. It's nothing else. We're going to take a look at Netflix. Narrative doesn't change. We had this huge fail of a rally for the Netflix because they tried to increase their subscription fees, and obviously that wasn't going to fly with the community. So they've been seeing a massive reduction in their stock value because people are saying, fuck you, we're going elsewhere. But yeah, if you were to attempt to trade it today, seems like it could have been a bit of a liability, just relatively speaking, only under the grounds that, yeah, all right, we had some structure. Wait, let me find it. Yeah, we had some structure like here, let's say, and then we got entry here at 950, and then price shot down. And not to say that it isn't a successful trade, it's still holding its original entry point, but just relatively speaking, the indices market is just on a different level. It's just on a different spectrum, in terms of ROI today. So that's interesting to see.